Hi, everyone. This is Rohit from Lifestyle Mastery. I'm excited to have Mac Conwell, who's a founder and managing partner of RareBreed Ventures. Mac is a former software engineer and two-time founder. One of Mac companies failed and the other went on to have a successful exit. RareBreed Ventures is a pre-seed fund that invests in exceptional founders outside of large tech ecosystems earlier than everyone else. A big thank you to Adam from Buffalo Market for introducing me to Mac. Welcome to the show, Mac.
Thank you. I appreciate it. I'm happy to be here.
Awesome. So, what got you interested in startups? If you've been a software engineer and a two-time founder, how did the journey start?
Yeah, really, the journey started. So, I started off as a government contractor here in the States, and a good friend of mine by the name of Patrick Jackson, he's the CTO of a startup in Silicon Valley called Disconnect, they're a VPN software company. And Patrick was the first person I knew who was like using his skills as a developer to create products to make money. So he's like one of the first people I know who was making iPhone apps. And we're talking about like back in 2007, like very early days of the iPhone, and making websites to make money. And he was the first person I knew who quit his job and moved to San Francisco to go start a business. And so as he was doing that, a group of us who were close friends of his all started doing the same. We started trying to create businesses that we figured could make money while we slept. That was the goal, to create a business that can make money while you sleep, right? And so that kind of started me and some of my friends on that journey, and it just kind of spiraled out of control from there.
Got it. And you've had one successful exit and one of your startups failed. How did your decision-making framework impact when your startup failed? We talk a lot about startups raising a lot of funding and success, but what really happens to a founder, and how does their decision-making framework change when a startup fails? And then how did you get back and again restart?
So my first startup was the one that we had a small exit for. My second one's the one that failed,
Okay.
and failure sucks. I would tell you it was one of the hardest experiences of my life. I tell people I took a 6 month sabbatical where I basically just hid in my house for 6 months and didn't want to see anybody because like I just didn't want to see anybody have to talk about the company that I was no longer working on. And I went through a bout of depression. It was terrible. But this is stuff that people don't talk about. But the thing for me that was really helpful was while I was going through that period, one, recognizing that the failure of my business didn't change the way that my friends and loved ones thought about me. Like the way they thought and felt about me never changed. It never wavered. Like they weren't my friends because I was doing a startup or because they thought I was going to be successful. They were my friends because they loved and cared about me. And just because like I didn't make a successful company the second time around didn't mean I wasn't smart, didn't mean they didn't respect me, didn't mean they didn't want to, support me. So that was really helpful. The other thing that was helpful was, these things called bills, they just never stopped coming. So even though I stopped working, I wasn't doing anything, like bills were still happening. So like at some point I had to get out there and figure out a way to pay those bills again. So that's how I was able to get myself out of that funk. But failure sucks, man.
No, absolutely. I think failure, a lot of people don't talk about failures, but failure sucks. And I think you've got a great support system where your friends and family were able to, get you back on feet. Um, do you think Silicon Valley and San Francisco will lose its network effects since we're in the midst of COVID for more than a year? What are your thoughts on uh, on other geographies and other areas? Also, will they also be able to build $1 billion companies?
Well, I do believe founders who have the ability to build $1 billion companies can be found anywhere. Like that's fundamental to my belief. Will Silicon Valley's stronghold on funding, specifically in the US, change now that, during the pandemic, everybody's doing everything virtual? I hope so, but I don't know, right? I would love to believe that it will. I hope that it will. We're seeing things trend in that direction, but I wouldn't be surprised if we looked up 2 years from now and everything goes back to the way it was. And a lot of it just has to do with, being able to do calls over Zoom is efficient, but people still I think over not over index, but I think people put too much weight on direct interactions, right? Physical in-person interactions. I can have the exact same conversation with you over Zoom as I can in person. So why does us talking in person have to make that much of a difference, right? Now, granted, technology fails and there can be issues along the way, but generally speaking, being able to communicate with somebody, meet somebody, whether it be through Zoom, through phone calls, through text messages, you can get to know and work with a person just fine. And so I think if we keep that mindset, we will see this change. But I don't know, right? Like I said, I wouldn't be surprised 2 years from now if people are like, hey, we invest in you, we want you to come to Silicon Valley. Because there is something to the idea of the density of capital and density of talent being in one place. Because now my ability to make introductions and support become really easier because everybody's in one location, right? I can make a 1 hour drive and get you to any and everybody you need to get to all in one place. And I can help you find the best talent without that talent having to relocate because they're already there, right? It's one thing to I was just talking to a founder recently. They're based here in Baltimore, Maryland, but they just got some funding and, they've had an investor who's like, hey, we want you to move to Ohio where we are, to pick up your family and move them across the country to a place that you're not familiar with. It's not as appealing, right?
Right.
But if everybody's in one place, it makes it easier. So there's something to that. But I do hope that this trend continues, because what we have seen is during the pandemic, as everybody's forced to do things virtual, we are seeing investors who normally haven't left out of their geographical area now talking to founders in places they normally wouldn't talk to. And so that is a benefit, and hopefully that stays. Hopefully that stays the way it is, because that'll be better for the whole ecosystem. But if it doesn't, that just means more opportunity for me. So selfishly, I can live with that.
Very interesting. And what are some of the main misconceptions that are still there with underrepresented founders, especially when it comes to founders who are women? They get just 9% of the entire funding, and especially and other other underrepresented founders. So what are some of the main misconceptions which the startup world has about underrepresented founders?
I think a lot of it has to do around with pattern matching. There
Right.
aren't as many founders of these underrepresented profiles you could point to, not that haven't built successful companies, but have built unicorns that give back venture returns, right? It's not just about, do these people have the ability to create good companies or successful companies? That's fundamentally different than from the investment world of, I need you to have the potential to create a unicorn within less than, call it 5 to 8 years. That's a really high bar, and not as many profiles of people have done it. And so, because underrepresented founders haven't gotten funded for so long, you have a group of folks who say, hey, I don't know if founders who look like that have the chance to get create unicorns, but we haven't been funding them for so long that it kind of skews all the numbers. And so now they use those skewed numbers against these underrepresented founders. That's crazy. The other thing is, you'll find founders who are from underrepresented backgrounds who are making products that are specifically for their communities. And people and other investors will be like, well, that's a very niche market. I think that market might be too small. Well, one, most of these niche markets still can hold multi-billion-dollar companies, is number one. Number two is, just because they build a product for their community doesn't mean only people from their community are going to use it, right? Like, if you look at a TV show like Insecure on HBO, right? Like, it's a TV show written by some great writers telling the story of this Black woman, like a coming of age story of a Black woman. It's for Black women, but plenty of other people watch it too. And like HBO didn't make the show because only Black women are going to watch it. They made the show because everybody's going to watch it, right? But granted, Issa Rae created that show for Black women, but everybody watches it. It's the same thing. And so those are kind of some of the misconceptions, or some of the things that come up that hold funders back from moving forward when it comes to underrepresented founders.
Got it. And just to follow up on that, what can LPs do to encourage more underrepresented founders are backed?
What we can do is, we probably need to over-index on investing in underrepresented founders now, just so we can get this wave started. It's one of those things where we're so far in going in the wrong direction that we probably have to overcorrect to get back to a middle ground, right? And so that's just investing in as many of them as you can, because what we're going to see over time is a bunch of them going to fail, but we're going to get enough in the funnel that we'll get a couple winners. And along the way, as we know, many entrepreneurs don't hit their success in their first one, but it's their second or third one. So we can get more into the community, get them into the networks, because that's the other thing. A lot of these underrepresented founders aren't in these networks. So getting them plugged into the network will actually increase the ability to show those numbers of successful outcomes from underrepresented founders over the course of, let's call it 15 to 20 years. And that's really the big thing that needs to happen, so that we can have the numbers and show the wins to back up everything that we anecdotally know to be true.
Right, got it. And I want to talk about RareBreed Ventures. Are you stage and sector agnostic?
So we are sector agnostic. The stages we tend to invest in are pre-seed and seed. Every now and then we'll do something a slightly later stage, just for the right founder, or right company. We are an investor in a company called Main Street. We were in a growth round of theirs. It's probably the largest valuation we'll ever invest in. But when you see a good opportunity, it's a good opportunity, right? My job as an investor is to make money for my LPs, for my investors, right? But we like to invest across the board, and that just speaks to my skill set as a generalist.
Got it. And how do you approach portfolio construction? How much of concentrated portfolio should one have?
It's different because every fund has a different approach, and really a fund strategy tends to be dictated by the size of their fund. The larger your fund is, the later stage you have to invest, because like if you have $100 million fund, the amount of work it takes to do a $500,000 investment and to do a $5 million investment, it's the same amount of work, right? And so it's just easier to manage doing fewer larger checks than it is a bunch of smaller checks. And so every investor has their own strategy. For us, as a pre-seed fund, we do smaller checks, but we do larger checks than what you typically see a pre-seed. So our target check is $250,000. So to give a pre-seed company that much money, some people scoff at it and be like, that's a lot of money to give a pre-seed. But for us, the math works out where if we get a few winners, our economic returns from that can be really significant. And we're giving entrepreneurs enough capital to help them do what they need to do, so that in 12 to 18 months, they should be able to raise more, whether they raise any more capital outside of ours or not. That's really a big thing for us.
Got it. And when you mentioned about putting in around $250,000, do you also look at Prorata and seat on the board when you come in so early?
Sorry, we do require a Prorata. That is big for us. We don't necessarily need to be on the board. We'll ask for information rights. We want to know what's going on, but generally we invest in companies so early that whether we're on the board or not, I'm usually my entrepreneur's first call anyway. I like to be there to support them and help them out as much as I can. That's something we care about a lot at RareBreed, and that's probably why Adam suggested you talk to me.
Got it. And do you believe is it possible to really build ownership across rounds today? Building up a stake of around 20% in the next couple of rounds.
That's possible, but it's going to be dictated more so by your relationship with the entrepreneur, because as we're seeing, a lot of the larger firms are starting to invest earlier and earlier, because there have been so many early stage funds that have come out now that the later stage firms are having a harder time competing. So now the later stage firms are coming in earlier and offering bigger checks, right? So for a fund like RareBreed, if we want to stay in and you want to protect that ownership, you just have to already have that relationship with the founder. So like if SoftBank comes in, it's like, hey, we don't want to wait till your next round. We're just going to give you 20 million a day and like forget all your other investors. Well, then that's stuff I need the entrepreneur to be like, no, RareBreed's already in. My other investors are already in. They're already going to get this much. This is how much space will be left for you, SoftBank, if you want to come in. But that can only happen based on relationship building that you do with the founders, because they're going to get those kind of opportunities if their companies are growing and doing what they're supposed to do. And so, that's incumbent on me to make sure that I'm adding so much value for my founders that they're willing to fight for me to stay in rounds.
And interestingly, you pointed about SoftBank, and if you look at Asia, you have Sequoia, which has come up with Search. They're investing into really early stage, and SoftBank has also started getting into early stage. Do you think there's an oversupply of capital when it comes to early stage, or pre-seed and seed stage capital?
No, because here's the thing, right? The pre-seed and seed stage, that's where most entrepreneurs are. Right? So there's so many entrepreneurs, like you'll never have enough money for that. And the other thing is you're writing so much smaller checks at that stage that the vast majority of the money in the space is still later stage stuff. Because when you get to a Series C or Series D, cutting a $150 million check as part of a $400 million round, like that 400 million could account for, let's call it 20% of all pre-seed and seed deals that are going to get done in a year, right? And so there's plenty of room for folks to come at pre-seed. Plus, like you just never know. Like look at Roblox. I think it took Roblox almost like 17 years to IPO for when they started. Like it started in 2004. Who knew that they were going to be what they are today, right?
Right.
But them getting that capital and being capitalized throughout their life cycle is what led them to where they are now, right? And so those pre-seed or seed investors back then who came in super early, like you gotta imagine they had some worries somewhere sometimes around there, right? Like that was a little skittish at times. And so the more money we have going in earlier, the more chances we're going to have for the bigger outcome. So it's always room.
Got it. And are there any sectors which you are interested in, like especially like fintech or edtech, and how do you make decisions when you look at so many of different sectors and companies to come into your portfolio?
I think for us, it's really thinking about, so we mentioned we look for two things. One, founders that have a clearly repeatable or unique customer acquisition strategy, and then physical products and markets that have lacked innovation for 10 or more years. And really, for us, the big thing is looking at founders who are thinking very critically around customer acquisition, experience, and retention, because those are the three pillars that if you can figure those parts out, you probably have a chance to be the win. Because what we know is that having the best product in the market doesn't necessarily account for being the winner, right? There's plenty of products out there that are way better than anything else out there, and they're not winning markets. But it's having a good product and having a great customer acquisition channel, and being able to make sure your customers love it, and that'll keep your customers there long term. You can do those three things. It doesn't matter what industry you're in. You got a chance to win. As long as the market's big enough and you got a good team, you figure out those three parts, that allows you that can point to a winner. And the reason that's big for me is that allows me and my team to strip out our biases. And now we can just look at a company based on how their business is running and how customers love them, right? And that's how I tell my team, we're going to be the firm that never misses out on the next Spanx. Because it's so easy to let your biases get in the way that, like, I don't know anything about women's wear or like why a woman would want Spanx like that. Like that's not going to resonate with me. But if I see that women keep buying them and they love them and that you're making money, well, there might be something there, whether I understand it or not. And so that's the big thing for me.
Interestingly, you talk about customer acquisition that entrepreneurs really has his execution done well. But how do you look at CAC to LTV ratio in the first few years? Because it's difficult to determine your CAC to LTV ratio in the first few years.
So when you're thinking about cap valuation, when you're talking about like your cap on like a convertible note or safe note or your valuation, it's really what I tell entrepreneurs, the way it kind of nets out, it's like, it's a simple math problem, right? It's like, how much money are you trying to raise? How much equity does the VC or investor want to own? And then who has what leverage, all right?
Okay.
So you want to raise $1 million. I want to own 20%. I want to own 10%. And you're in the process of thinking about giving up 20. Okay, well, here's 500,000. I can find another investor, put another 500,000. That gets you $1 million. and your valuation is going to be at 5 million. So that means the new million we put in counts for 20, meaning this other VC each have half of it. So that means I get my 10%, they get their 10%, that equals 20, right? That's the $1 million. And that means your valuation is 5, right? Just everybody, you need the million, we each needed 10. We got to the number we needed to be at, right? Simple math problem. The thing is, once you get there, then it's about who has what leverage, right? Typically, if the VC has the leverage, then the number's probably just going to stay where it is, or maybe even go lower, right? Instead of 5 million, might be a $4 million cap. Or if you're on the other side where you're an entrepreneur, like, hey, I'm raising $1 million, but I got 28 other firms who are interested in investing in this round. So our valuation is now going to be 20 million. Well, now me as the VC, I just have to decide how much I like the company and how badly do I want to get in it. And so, like, that's not the target that I was going for, but this is the only chance I get to invest in it. Well, I might as well go for it, right? Because, like, if Uber tells you, like, hey, we know you want to come in at this 5, but we got a bunch of people. So if you want to come in, it's going to be a 30. Well, if you put in $1 million in Uber at a $30 million valuation, you're still really rich at the end of the day, right? You made a bunch of money, right? And so those are the trade-offs you have to make, but it all depends on, but it starts off with the initial calculation of how much are you trying to raise and how much of the VC or investors want to own. And then the tug and pull starts to come about who has what leverage and where that leverage comes from. That leverage could come from customers, it could come from revenue, it could come from giant partnerships, or it could just come from FOMO because there's just a bunch of people who want in, right? So that's the way to think about it.
Got it. And when you invest so early, you're always looking at the best team. But who do you think makes the best founders, in your opinion?
I mean, great founders come in so many different types of profiles, but I'm always partial to somebody who's an expert in a specific field and is now building a solution to a problem that they experienced in that field, right? Somebody who's worked in the industry and like, yeah, this needs to change. And so I'm going to build something to fix that. And the part about that is because they already know the hard part, which is the ins and out of that specific industry. They might understand the regulations. They might already have relationships with potential customers and partners. There's a lot of advantages in that, as opposed to somebody who's just an engineer who could build some cool stuff. It's like, hey, I think I found the problem. I can build something to solve that. Now they still gotta fill in the gaps of the rest of their team to gain all that other institutional knowledge, right? It's a lot easier to already have institutional knowledge and find somebody to build the product for you than to be somebody who could just build a bunch of stuff, but then having to figure out the business part can get difficult.
Correct. And the name of the podcast is Lifestyle Mastery, and maybe we'll also talk about the value systems, which I wanted to understand what was your value system that led you to build RareBreed Ventures, which would differentiate yourself from other VC firms.
I think the big thing for me, the thing about RareBreed was there were 2 entrepreneurs that changed my life. One was a woman building a product in the market, in an industry that hadn't had any innovation in our lifetime, and ended up having to become a surrogate mother to raise the money to start building her prototype. And the other one was a founder in Dallas, Texas, a Latin gentleman who had customers, had an amazing channel partner, was doing all the right things and trending in the right direction, and yet couldn't get funding from anybody, and nobody was paying attention to him. And it's like, here are 2 founders making amazing products and building incredible companies, and neither one of them could find backing. And one's because she's a Black woman in Baltimore, and the other one's because he's a Latin guy in Dallas, Texas. And it's like, okay, we can solve for that, right? I can solve the money issue, right? I can't solve, you being a good entrepreneur, you having a good idea, or you being in the market, or you getting customers. I can't help with that, but like, you got to have some of that already. But whether or not you already got all the other stuff together and you just need capital to move faster, like, I can solve for that. And so that was the big thing for me. I saw that there was opportunity, and there were a lot of investors who were ignoring it, and so, like, I didn't want to ignore it.
Very interesting. And, we had Adam who from Buffalo Market who came on the podcast, and he was kind enough to, introduce us to you. He talked about getting Elizabeth Yin from Hustle Fund, who's one of the customers for his business. But, what was your story, and how did you get the investment deal for Buffalo Market?
So it's funny. The way Buffalo Market happened was Adam's partner Sean sent me a DM on Twitter months before they started fundraising. He's like, "Hey, I like what you're talking about. Want to meet you. Like, we should talk." And so I met with Sean, and I thought what they were doing was interesting. And then he introduced me to Adam, and then we got to watch them for a few months. And Adam was just hitting it out the park every step of the way. It was just like every time I looked up, everything he told me he was going to do, he was doing and then exceeding. Like every month, he was hitting his numbers, he was making things happen, he was tweaking the business model, getting smarter about it every month. And so then, when it came to January, when he was deciding to raise capital, me and the team talked about it. It was pretty easy for us to get to a yes. He did everything he said we were going to do. He was growing really quickly. And he's probably going to end up making me look really, really smart one day.
No, absolutely. I think Adam was one of the best podcast episodes we did. And how do you usually get your deal flow from other ecosystems, considering that you're not in one of the you're not in Silicon Valley or New York for that matter.
Well, part of it, if you follow me on Twitter, I do a lot of branding around RareBreed, and so having that brand presence definitely helps. I speak at a lot of accelerators and incubators all across the country and now internationally. I like to go into communities and like get to know the innovation and small business community in places. And then I have a lot of people just reach out to me directly, whether it's LinkedIn, whether it's Twitter, whether it's just emails. And then, I have a huge network of other investors who send me stuff all the time. So, I get deals from all over the place. And, and then I have an amazing team who's always finding deals too. So, we're always seeing exciting stuff.
Got it. Mac, I quickly want to do the top three. What's your favorite business book?
My favorite business book, I want to say Lean Startup because that's like a book that I still like listen to regularly. But then, and this is going to be biased just because I'm like listening to it right now, and it speaks to me from a very personal place. But it's a book. Why should all the white guys have all the fun? It's an autobiography from Reginald Lewis. At one point was the richest black man in America. He is originally from Baltimore and was a lawyer and later became the head, started his own private equity firm. I'm a black guy from Baltimore starting a venture capital firm. So like for me, that book speaks very personally to me. So I put that on the list. But I still to this day I tell founders go read Lean Startup first. Like if you're just getting started, start there, and then we can work through some of the other stuff.
Got it. We'll put that in the show notes. And if you could go back in time when you started RareBreed Ventures, what is the one thing you would have focused on or done anything differently?
What would I have done differently? I mean, I'm still so early on, right? I'm still new in all this, but I think I would have started protecting my time on my calendar sooner. There was a couple months there where my calendar was crazy, where I'm doing like 20 to 25 meetings every day, not really sleeping well, just always working. I'd have probably put that in check sooner. And I might have been I'd have probably tried to been smarter about my initial reaching out for people to be LPs in our fund or to invest in the fund. But, everything's, to this point, we're raising under 506C designation so we can publicly solicit it. Me being able to tell people, hey, if you want to be an LP in RareBreed, go to rarebreed.vc. Our minimum check size is $25K. You can pay that over 2 years if you so choose. That's been really powerful and it's allowed me to generate some early capital and been able to deploy as I go. So things have been good.
Got it. And do you have a favorite online tool, for example, Zoom, Slack, Gmail?
What was the question? I'm sorry.
Do you have any favorite online tool, for example,
Oh,
Zoom, Slack?
favorite online tools, probably Undock for my calendar, Zoom. I hate Google Meets. I hate it when people give me meetings for Google Meet. I prefer to be Zoom. I also hate Microsoft Teams because it takes me forever to get on because I never use it. So Zoom is amazing. Bevy, full disclosure, I'm an angel investor in Bevy, but Bevy's awesome for like, virtual events. So give a shout out to Bevy. So those are some of my favorite digital tools.
All right, we'll put that in the show notes. Mac, what is the best way people can reach out to you and know more about RareBreed Ventures?
Best way to reach out to me is to follow me on Twitter at Mac Conwell, MacConwell. You'll get all the information about me, updates for Rare Breed, and feel free to DM me. If you DM me, it's no guarantee that I'm gonna respond. So if you don't hear from me, just bump it up and keep bumping it until I do. Like, hound me respectfully. Don't go overboard, but just keep putting it in my inbox. I'll get to it.
All right, we'll put that in the show notes. Mac, thank you so much for taking your time speaking to us. I really enjoyed my conversation with you.
Absolutely, man. It was a fun one.